It doesn't make sense for them to even go to NASDAQ. Is it as simple as it seems, or is there like a hidden meaning? Right, we'll dive into that in a short while. On the 14th of November, Palantir actually released on their IR page that they are going to transfer their stock exchange listing from New York Stock Exchange to NASDAQ. Is that a big thing, or is just a brushing news, right? Okay, so before we even talk about that, some of the interesting thing that happens was that one of the directors in Palantir, Alex Karp, he actually posted this Twitter or X post, and shortly after he did this, his whole account was closed. Why is that happening? But anyways, what he mentioned inside is that they are moving Palantir into NASDAQ because it's going to force billions into buying ETF and deliver tendies, right? And if you don't know what tendies is, which I didn't know like until today, right, is that it's actually a term that they use for gains lah. And basically, it's trying to say that Palantir moving to NASDAQ can help to increase the gains of retail investors. It's also trying to say that Palantir has been hated for many years because of their contribution to some of the more bigger things, like for working with ICE and also with all the immigration stuff. So partially that could be a reason why people are hating it. End of the day, it still comes back to how they have successfully helped investors that stayed true with them holding their stocks to so-called profit from this whole bull run so far. What more important for us to take note is that in the near term, this spike to $60 or 60, I don't know how much is it now, 62, right? This short-term spike, whether it's helpful for us, is more crucial to take note is that we are talking about long term. How will this actually help us long term, right? Is basically comes back to the business model, the fundamental stuff of things. Okay, yeah, so the reason why his account got deleted, I have no idea, but I think that one of the comments from a previous SEC official is that, hey, you are a board of director, you shouldn't be saying this kind of stuff, although it's trying to encourage or prove a point, but yeah, but you're a board of director, so as a director, you should have some like control over what you do. I have no idea why he deleted it, but I guess it has to be something to do along the line of this. And there could be potentially like some insider news that might trigger. I don't know. But let's come back to what this transfer means. Okay. So basically what is going to happen is that on the 26th of November, your ticker for Palantir hopefully doesn't change, but the stock exchange will change for NYSE to NASDAQ, right? It's going to transfer all of the stocks, Class A stocks over there. And what this is going to mean for us depends on how we look at things. For me, when I heard about this news, the first thing that came to mind is that what is the reason that they want to change from New York to NASDAQ? One of the key things is that, is it because of cost, right? Because when we list products or like companies getting listed on the exchange, there's always a fees. And in this graph itself, you can see this is actually from New York Stock Exchange.com. They even compare in front of everyone, right? In terms of fees, that's when you initial listing and also like annual fees. What I've highlighted is that it makes more sense to go into that particular stock exchange. If you are somebody who is going to get listed on an exchange, right? And if you want to be getting more value out of the money you're paying, right, then paying NASDAQ for the number of shares up to $10 to $15 million makes more sense. Otherwise, you should just stick to New York Stock Exchange, right? And you can see that for 5 million number of shares and as well as 20 million in shares and above, the fees is actually the same for the initial. I don't think it's on this, but let's take a look. Is it on the second portion, which is the annual fees, right? So every year, because you're getting listed there, and the exchange needs to like monitor and do some compliance. I don't know, some of this administrative stuff, right? They require some fees, right? So if you were to compare the annual fees, right, it doesn't make sense for them to even go to NASDAQ because New York Stock Exchange is much cheaper, right? You can see that it even kept at like 50K once you pass the 80 million outstanding shares. But you see the NASDAQ is like charging you 75K. It definitely doesn't make sense if they're trying to save cost in this area. But is this small portion at the bottom, which you can see here, that the only good thing about going to NASDAQ is that if you are going to have additional shares issued during that year, right, New York Stock Exchange is actually charging you 2 cents per share. And for NASDAQ, you are not going to be charged with, I'm not sure if there's any other decimal points, but from this slide itself, I'm just assuming for NASDAQ, as you issue more shares, you won't get charged. Okay, so what is this means, right? So this means for Palantir, if they want to benefit from NASDAQ, they will probably eyeing for the additional fees they have to pay every single year, and we will go into that shortly. Okay, so how many of you think that which one is better, NASDAQ or New York Stock Exchange? Just getting a sensing of things from everyone. Oh, Rupert says that NASDAQ is better, sounds more advanced. Right? That could be a reason, right? Because when we talk about NASDAQ is like for the tech space. As a tech company like Palantir, maybe they wanted to go into NASDAQ because of the tech identity itself, right? Yeah, they also mentioned that over here, let me just go back to the slide. They mentioned that upon transferring, Palantir anticipates meeting the requirements to be listed into NASDAQ 100 index as well, which is what Eric mentioned, right? So this is, I think, one of their goals, because you imagine this, they getting themselves listed on S&P 500 has already garnered so much attention, there's so much volume or trades or spike, right? So can you imagine if you are then placed into the top 100 tech companies in US? How would that sound? I think that definitely sounds amazing for Palantir's case. Like, oh, I see, we got ourselves the first award from S&P 500. Now we got the second award from the top 100 companies in NASDAQ. Obviously, that will be one way they can see their share price going up faster in that case, right? Because there will going to be more trading going on, and the companies or the funds that are holding on to NASDAQ 100 I think it's also a lot. Right, and then I went to search a little bit on this NASDAQ 100's requirement. One of it requires the company to be listed on NASDAQ for at least 2 years. So I think it's not so soon, but 2 years later, we shall see whether they get listed on the NASDAQ 100. That is on the normal basis. I'm not sure if there's going to be any like exception for Palantir's case. Yeah. Okay, so as I was talking about the key reason, or one of the key reasons why I think they want to go NASDAQ, besides the fame and glory stuff, comes to the practical point of view. And this is the reason. They are paying a lot of money in New York Stock Exchange for additional shares. And why is this the case? Right? The key reason is this. If you were to look at the top numbers, this is the number of shares. And I took this from Pinchet.io. So just wanted to shout out that. Yeah, but anyways, every year from 2020 until this year itself, latest 12 months, right? Every single year, you can see that they have been increasing in the number of shares. And this is in millions, okay? So from 2020 to 2021, they've increased 230 over shares into the company. And we'll talk a little bit on dilution if that is going to be a concern as well. Okay, so can you imagine every single year you're going to be adding more shares, or you want to create more shares, right? And every single time you create more shares, each share is going to cost you 2 cents. So how much money have Palantir been paying New York Stock Exchange for these services? Right, over the years, they have paid almost more than 8 to 9 million. 8 to 9 million just to have more shares. If you think that is a lot, type in 1 in the chat. 8 million just to have more shares. Of course, the shares have other reasons to either use as stock-based compensation or to increase the liquidity so that you can improve the trades and all that stuff. But paying $9 million, is it 5, 6, 7, 8? About 9 million, right? 9 million plus. This money could have been used for other purposes. Right? And of course, as investors, we would rather them use this money to improve the number of sales they're going to get, or increase in the R&D stuff so that they have a bigger and better product moving forward, right? So these are the kind of investment we want to put. We don't want them to use money to pay off all these unnecessary admin fees, right? Yeah, so I partially think that this could be the reason why they wanted to escape from New York Stock Exchange. And if that is really the case, then as investors, we have a big problem. Because this means to say, if they're saving money here, they are likely to increase more shares. If you understand this, admin 3 in the chat. And of course, as a tech company, as you grow more, you want to incentivize your employees, including the founders themselves, right? So definitely the number of shares that is diluted, we're going to stock-based compensation. And of course, this is not good news for us investors, because if we don't buy more shares, or if they don't give us more shares free, which is never the case, right? We are going to have more dilutions, as what Hui Kong has mentioned, right? So is there going to be more dilution to come? I suspect there is, but at the same time, is it going to be a big problem? It really comes down to this next slide. Okay, so when it comes down to dilution, what we all understand is that as the number of shares started with, let's say, 100 shares, if you now have issued more 50 more shares, your dilution of the number of shares have now become 150. And your 10 shares before that is 10% of the whole company. And with that dilution of another 50 shares, your percentage from 10% of the company have now reduced to, I don't know, about 7, 8, 9%. So that means to say your ownership of the company actually went down. But this is if the company don't continue to grow more and don't continue to be more valuable. Okay, so over here you can see that I have this slide. Let me just move this away. Yeah, so this slide actually shows you, right, in terms of per share. And since we're talking about dilution, as an investor, I would like to see the value of my company, all right, in terms of per share basis, so that is more comparable. Okay, and you can see if I were to just put in the revenue per share as well as the earnings per share, you can see that over time, is it going up or down? Type inside the chat. Is the number going up or going down? It's slowly going up, yeah, but the trend you can see is that it's going up. And this is to counter your dilution, right? If the company continues to generate 2 cents per share and the number of shares increases a lot over time, right, then the 2 cents per share is going to be either remain the same or will go down, right? But if let's say in this case the number of shares increase but the per share value in terms of revenue or in terms of earnings is slowly increasing, then as an investor I am less affected by this because I know that my company's worth, even though I own lesser shares now, the value actually went up. If you understand this, type in 1 in the chat. All right. Okay, so this is more or less why I think this is not going to be a big issue for me as an investor when it comes down to this, right? And then if you were to look at the next thing, of course, before we talk about the next issue with Palantir or the next matter with Palantir, as you can see, this is telling you that this is likely going to happen, and it has already shown from the past that they have dilution going on, right? It's just that the value of our per share is naturally not affected. So coming back to the point on Palantir getting their New York from the listing from New York Stock Exchange to NASDAQ, is it a big issue? I think as investors, it is not a big thing. The big thing is only if let's say we want to get or we want to follow the hype of things, because likelihood for them to go into NASDAQ is to go into NASDAQ 100, and that is the where the hype comes in. But fundamentally, nothing has changed for Palantir because the listing is just uh, it's similar to us changing house from place A to place B, right? It's just the place where you stay, the place you are listing your stock. It doesn't really change the fact about your company's business model or the fact that your company shares is valuable or not. If you were to ask me as investor, what do we need to be concerned about this? I don't think it is the case, right? So as investors, do we need to do anything? We don't need to do anything because the brokerage will settle everything. It's just a change of either the ticker or just stock exchange. We don't need to do anything. It's not as if we need to pay them to convert for us, right? So it's on Palantir's end. That is more on the whole listing changing. Okay, so then now that we have covered the Palantir's changing of exchange, the next thing I'll talk about is Palantir's CEO Alex Karp decided to sell his shares. Is it time for you to sell as well? Upon a deeper look into the SEC filing, right? So this is where we can see how big ownership or the major holders like your founders and your investors, right? When they sell, they'll usually have to issue a SEC filing to let people know that they sold their shares, right? And from here we can see what is the reason they sell, right? So under here there's some code. Right, so I usually look at the fine print of things, which tells you like 1, 2, 3, 4, 5. And if you were to look at the reason or the fine print, or what's this thing called? is it the sub? I don't know what it's called. Anyways, yeah, there's usually some numbers at the side put for you to find out what's this footnote about. And then if you can see, right, the reason why he's selling is not because the company is going down or he's just exiting the company, right? The reason for him to do so is because he already has a pre-existing arrangement to let the SEC, which is the regulatory body, to know that, hey, I tell you in advance, I want to sell my shares, so that you cannot say that I am doing insider trading. Okay, how many of you still remember the time when me and Eric were talking about Microsoft, where we talk about the if I'm not wrong, we are talking about Microsoft's Satya Nadella selling his shares. If you still remember this, type in a 1 in the chat. I think that was 2 months ago. Yes, 2 months ago when we were doing at our one of the testing space in Pongo. Yeah. So, anyways, yeah. So what this Rule 10b-5 trading plan means, right, is for them to pre-order or pre-sell their shares or pre-allocate the number of shares they want to sell, and when the time comes, ta-da, they will sell their shares. Okay. If you understand this, type in a 2 in the chat. Okay, great. So I also want like this. You want to have a pre-existing plan to sell. I think also can. You can go to your you can go to your brokerage and then just say that, oh, by this day I want to sell my shares. I think I'm not sure about Tiger Brokers, but I know that IPKRX have this function. Yeah. Okay. Yeah. But anyways, this slide itself also shows you, even though he has sold so many shares, right? So I think it's millions of shares, 5 million, 6 million, 6 point something million of shares, right? He still owns a lot of shares, right? And this also means that he still has skin in the game. He is still likely to continue to drive the company to greater heights because I think a bulk of his net worth is still here, lah. Okay. Okay, whether you want to sell, I think it still comes back to your personal portfolio. If your position in Palantir has become a very overweight, like me previously when it was $50 that time, then unfortunately my sell call took place. But anyways, I was to really reduce my risk, so that I actually did a capital recycling. I cash out some of my positions so that firstly, I increased my cash position, just like what Warren Buffett did in recent times. But it's always good to have additional cash in when we talk about investing, because we never know when there's going to be a next correction or a next market downturn. And this is where having cash on hand allows you to buy in at maybe a low price, or like at a very valuable price. I would put it that way. Okay, so this is why is it time for you to sell. I think it still goes back to that particular company's weightage on your whole portfolio. If it should not be the case where it's oversized, in that sense that, let's say for Palantir's case, if the Palantir's value of it is like 70 or 80% of your whole portfolio, while you own 5 companies, right? It should be rebalanced from time to time again, so that you know that your portfolio, although it will, this actually reduce your what do you call it? Reduce your gains over time. But it's good to practice this because we do not want ourselves to be over dependent on any single companies, if that's the case. But if you have ETF, then I think it's okay for you to consider adjusting this weightage lah. Okay, that's all on that. Thank you so much for watching to this video, and I hope that you have enjoyed and learned something from this segment of our weekly Wealth Pulse sharing. We conduct our Wealth Pulse every Tuesdays 8 to 9 p.m. as we deep dive into the latest and biggest market news and what this means to investors. Do remember to like, subscribe, and also share with more of your friends to support us in making investing easy for everyone to follow. Join us in our community through Wealth Pulse, and I've placed the link in the description box below. I will see you online then. Bye bye.